Hello, and welcome to another episode of Freedom Ain't Free. In today's video, we're going to talk about how to live off your $2 million portfolio and never run out of money. Right here at the Freedom Ain't Free channel, we've been talking and teaching on this ideal or concept of living off of our assets and not living off of our labor. We've been encouraging you to strategize on this first tier of financial freedom and building out your $2 million arc. If you can get between a 6% and 8% return on that overall portfolio, you have between $120,000 and $160,000 a year in income. And for most of my clients, they would be financially free. And we primarily focus our practice on helping a group of people we like to refer to as Henrys, high earners, not rich yet. You figured out how to make some money. You figured out how to move your career forward. And now you're ready to make that transition to make your money work for you and your money to create income for you. So in today's video, we're going to talk about once you've built out that $2 million portfolio, how do you turn that into this income stream that you can live off of for the rest of your life? And so I want to categorize this conversation today around the three buckets. So if you spend any time with me, you know that I like to talk about buckets of three. So three buckets of income. And these are the sources or the categories that your income is going to fall into. And then we're going to talk about what goes into each category. If you want, of course, more information, there's a link in the bottom of the video here. You can schedule some time and we will help you look over your individual situation. Make sure you get your freedom number so you know exactly how much money you need to save on a monthly basis for you to build out your $2 million portfolio and for you to get financially free. So your three buckets of income are going to fall into a guaranteed source, a moderate risk source, and an aggressively risk source. We want to live off of our assets so that we can go about doing the things that we're passionate about, so we can focus our attention on those things in our family. So in the conservative or the guaranteed bucket, we want to make sure that we have sources of income that are going to come in year after year after year. They're not directly associated to market gains, so we can rely on them, and these sources are guaranteed. So on your guaranteed bucket, I want you to have or focus your attention on an income annuity. An income annuity is a product that you purchase from an insurance company. You give them a lump sum of the $2 million. They're going to tell you exactly how much money you're going to get on a monthly basis. That's going to carry you for the rest of your life. So we're not going to put the whole $2 million in the income annuity. We will put a portion of the $2 million into the income annuity to cover your floor, right? And I like to look at your floor, is that minimum amount of money that's got to come in every single solitary month, or you got to go back to work, right? Secondly, in your guaranteed bucket category are going to be your bonds. Right, so these are municipal bonds or treasury notes or bonds or corporate bonds where we know exactly what type of rate of return we're going to get. Fixed annuities fall into this category as well. We know exactly how much money we're going to get. We know exactly what the rate of return is. Therefore, we can count on it as a guaranteed source of income for ourselves. And so when you're looking to build out your 120 to 160,000, a portion of that income got to be guaranteed. Just like your life is set up right now. Every 2 weeks or once a month or every week, you get a paycheck, right? Part of that paycheck you're going to use to take care of those requirements, and the rest of that paycheck you're going to use for lifestyle. Well, let's be honest. Sometimes, the electric bill is a little higher. The gas is a little bit more expensive, right? So our lifestyle fluctuates, but those core pieces of the puzzle, they got to get paid every single solitary month. I want that income for you coming from a guaranteed source. Next, we're going to step up to this moderately aggressive, moderate risk category. Here is where we're going to kind of move into our sources of income coming from dividends, whether that's coming from an insurance company paying me dividends through my insurance strategies, or a corporation paying me dividends as a part of the profits that they've earned that are being returned back to me. So if I own some shares in a company, as an example, we'll use IBM. And IBM declares a dividend every year. Let's say IBM declared a $6 per share dividend, is an example. And I have 10,000 shares of IBM stock at $6 per share. That's $60,000 a year in dividend income coming every year. Now, dividends are not guaranteed. So I don't know for sure that IBM is going to pay a $6 dividend or a dividend at all every single solitary year. So that's why it's in the moderate risk category. I may get it, I may not get it, and I have to manage that as I manage through living off of my income instead of living off of my labor. So the insurance company is going to pay me a guaranteed rate of return. And on top of that, the insurance company is going to pay me a dividend, right? So as they make a profit, they return part of that profit back to me. I can access that profit and use that profit to live off of without really disturbing the core of what I'm doing within that policy, within that structure. The third category is going to be your aggressively risk bucket, right? Here's where my money is fully in the market, right? It's in my stocks, it's in my bonds, it's in my mutual funds, those pieces of the puzzle. I fully have my money engaged, my money's fully in the market, and I'm taking on the full market risk within that individual piece of the puzzle in that space. And so when you're looking at your aggressively risk category, you have to take into consideration what's going to happen, right? So markets go up and markets go down. So this income that I'm going to derive from this particular piece of my puzzle, I have to make sure that I understand that it's not necessarily going to come in with some regularity. So I have to manage this part of the portfolio. But there's some areas or some ways you can design on that aggressive piece of the puzzle, so it has some semblance of consistency on an annual basis, not necessarily on a month-by-month basis. So if I'm using as an example an index annuity strategy where my original investment is protected and I can't lose my core out of my $2 million that I have in that category, I can just pull out the gains that I get on an annual basis. So that's an opportunity for you within that space. Secondarily to that is if I'm investing in the S&P 500 index. Well, on an annual basis, the S&P 500 index is going to have some great fluctuations, but overall, if there are gains that year, I can capture those gains and I can use those gains and I can live off those gains. So now you wouldn't want your entire $2 million portfolio in the aggressive space. We would want a part of that portfolio in the aggressive space and utilizing that piece of the puzzle from an annual thought process, overall income, focusing in that space. You want to focus that attention, you can use strategies like direct indexing, which is also going to have some tax advantages to you with tax harvesting. When you pull off the losses, we can save a little bit taxes on those other pieces of the puzzle if that money's coming out of a qualified plan. So there's some tax advantages I can use to offset some losses and create some additional space within my tax bill, saving me some tax dollars there as well. You also can look at alternatives. So if you look at energy companies pay dividends from that perspective. And so I can add the alternative space into my portfolio and I can get the dividend from the energy company, utilizing that piece of the puzzle to supplement my income overall. So in the aggressive category, I got a lot of things going on. I got to manage those individual pieces of the puzzle to make sure that it's going to deliver on an annual basis the income that I need in order to stay and remain financially free. And that's the big piece of the puzzle is I want to create that $120,000 to $160,000 a year in income so that I can be financially free and go and pursue the things that I want to be passionate about. Now, I recognize that I shared with you the three buckets. You got your guaranteed bucket, you got your moderate risk bucket, you got your aggressive risk bucket. All three of these pieces of the puzzle. And some of this information might seem very intimidating. And some of this information may seem like you could never put these pieces of the puzzle together. What we want to invite you to do is join us in the Financial Freedom Institute. There's a link down below that's going to give you some more information and an opportunity to join the Institute. Within the Institute, we're going to give you a deep dive into all of these subjects. Going to explain to you what a stock is. I'm going to explain to you what a bond is. I'm going to explain to you what a mutual fund is. Here's the best part. It's $299 for the whole year. Every month, I throw in additional videos and additional impacts information. And when you join the Institute, not only is that, we're going to give you a one-on-one session where you're going to get your freedom number. And we're going to tell you exactly how much money you need to save on a monthly basis for you to become financially free. And once you know what you got to do to get yourself over the hump, you'll be able to put a plan together to help you accomplish that and then begin to live your life and focus your attention on the things that you are passionate about and not have to focus your attention on just the things that you have to do at work. Once again, we want to thank you for joining us today on this episode and want you to remember, freedom ain't free.